Hey, so I want to talk to you guys briefly about the relationship between merchandise inventory and accounts payable. So I'm going to jump down to page 158. And if we've talked before or if you watched the other videos, it is very important that you go through this book step by step with your QuickBooks website. It takes you step by step, telling you, if we scroll up a little bit, you'll see here that it tells you if you want to go to the audit log, it tells you to select the gear icon, tells you to do other things. But every page of this book is like this. It walks you step by step through everything that you're having to enter or do in QuickBooks. So if you have a question or have trouble finding something, definitely refer to the table of contents. It's broken down by chapter, and each chapter is broken down by title. Specifically, we're going to talk about inventory, products, and services because that is where we find the relationship between merchandise inventory and accounts payable. So here we're talking about purchasing inventory on account. You see that we purchased $300 worth of inventory from Ample Store. There are actually 20 items within this purchase, and they are $15 each. We purchased $300 worth of data storage products from Ample Store. That $300 got us 20 items. Each of them cost $15. When we paid it for whatever reason, we told Ample Store that we will pay them in the future. This could be because we really don't have the money to pay out of pocket, or it could be because the organization is trying to build credit. There are various options. Somebody could have the money and still want to pay in the future. This gives people the ability to purchase the inventory and try to sell these before they make a payment. So, this is the relationship between merchandise inventory and accounts payable. When we purchase something on account, it's kind of like putting it on layaway, except for with business layaway, you get to take your data storage products, you just pay for them at a later time. And again, the benefit of that is that it gives us a chance to sell these items before we make the payment. So we have the opportunity to make a profit before we start paying these expenses. If you scroll down a little further, here we talk about selling the same inventory that we just purchased. It told us for the $300 from we paid Ample Store, we got 20 data storage products for $15 each. Here, we are selling these data storage products. So, in between these two illustrations, you don't see where we paid Ample Store. Instead, we're selling $75 worth of data storage products to someone for $150. So this better explains on that question when it asked why would merchandise inventory and accounts payable have different balances. This could be a potential reason. We owe Ample Store $300, but before we paid them, we sold $75 worth of inventory. This is going to change inventory account balance. Since we sold $75 worth, that means we only have $225 worth of inventory left. However, since we have not made a payment to Ample Store, we still owe them the full $300. So, just based on these two transactions where we purchased the inventory on account and then sold it to someone else, we have less inventory but still owe the same amount of money to Ample Store. Another example could be that we have not made any sales, but it's time for us to pay Ample Store anyway. So we paid them the $300, even though we still have $300 left of inventory. So these are just a few ways that inventory and accounts payable are related because there are some times where we may pay for our inventory after we get the items. We could be doing that because we don't have the money, or we could be doing it just to give us a chance to earn a profit before we start paying out expenses. Because inventory is sold at a different rate than we make payments to Ample Store or any other vendor, that is why the account balances may be different, even though initially they were the exact same. So, just based on this example, we bought $300 worth of inventory and then we turned around and sold $75 worth of it. Definitely review this example as many times as possible until you understand what's going on. The main reason merchandise inventory and accounts payable is related is because we're paying for something in the future. You could kind of consider this like layaway at Walmart or Target or other stores that do that, except for with business layaway, you get to leave with your items and you pay for them later. Definitely review this video as many times as possible. Review your answer on your Chapter 2 discussion and your Chapter 2 written assignment to see if this better explains how inventory and accounts payable are related. And again, I encourage you to go through this book step by step with your QuickBooks software just so you can follow along with the steps. It makes it a lot easier because, again, if we scroll up a little more, each page of the book walks you through click here, do this, and gives you various hints to get the work completed. This video specifically talks about why merchandise inventory and accounts payable are related and why they may have different balances when they first started off with the same balance. If you have any questions, please shoot me an email if you need them answered or if you need to schedule tutoring. I encourage you again to review this video as many times as possible, compare it to what you've already submitted with your lesson 2 work, and see if you better understand. If it doesn't make sense, definitely shoot me questions. If it does make sense, let me know that as well.